What's up, guys? Welcome back to Everyday Money. First off, out of the gate, I'm just going to start off with this because I'm going to be saying some stuff today that has some implications, and just, I'm going to be saying things that to do, and it's just my opinions, what I'm telling you guys today, based on my experience, based on past history, and, just based on all that. So first off, the things that I say today are not a recommendation to buy, sell, or hold a stock investment, cryptocurrency, real estate investment, whatever. These are just my opinions. I'm not a financial advisor. I'm not your financial advisor. And so you guys need to do your own research. You need to use your head. Think about if the things that what I'm saying today would apply to your situation and would be good for you. Because right now in the world, everything is going, it's going upside down, right? Between inflation, supply chain issues, the prices of, everything going up, maybe independent of inflation, just supply chain issues, the monetary supply being inflated by at least 5 times in the last 2 years, the war in Ukraine, and then, possibly that spiraling out of control. Oil and gas prices going nuts because of, supply issues and sanctions that are being put on stuff. Everything is negative right now for the economy. The pandemic has kind of gotten just pushed off to the side with this Ukrainian thing. We assume that it's sort of fizzling out or just becoming over with, but that doesn't necessarily mean it's not going to come back and have some sort of other major effect in the economy. So right now, everyone is in doom and gloom mode. People, I hear it all the time. Should I take all of my money out of the markets? Should I stop putting money in? Because every single time that I put money into my 401k, into a taxable account, into my Roth, whatever, that it's going down in value. So I'm just consistently losing money. And the thing is if you do that, for one, if you take all your money out of the market, you're just locking in losses from wherever we were before, 4,800 on the S&P, and wherever the Dow got up to, because I don't really follow the Dow too much. But to where we are now, you're looking at like a 11, 12, 13% loss, depending on where we end up today. So, you lock in that loss and it's done. The thing is that is what most of you guys out there are going to do. If you're just tuning in here, and if you are just tuning in here, be sure to hit the subscribe button, the like button, the notification bell so you don't miss anything. But most people out there are going to be like that. They're going to have a scarcity mindset. They're going to be afraid and want to pull their money out or stop putting money in because they're seeing their money not grow, and in some cases, go down in value, especially if you just started investing in the last, let's say, 2 or 3 months, right? But then there's folks like me, and there's folks like Warren Buffett and other investors who know that because of the things that we are doing today, we being individual investors, that we are going to be in 5 or 10 years, we are going to be 2 or 3 or 5 or 10 times wealthier than we are right now. And we may, if you're out there and you're still working a 9-to-5 job, you may be able to invest now and be able to quit that job in 10 years. Because in bad times, in depressions, in recessions, pullbacks, this is when the fortunes are made. This is if you're a crypto guy, this is buying the dip, okay? When everything is going well and the markets are going up, it's always green every single day. Like we've basically seen from essentially like 2011 until the beginning of 2022, with some notable exceptions there. There was that December crash in 2018. There was the coronavirus shutdown crash in 2020 or 2019, can't remember. I put a bunch of money in during that, and it's paid off in a big way. But other than that, we've been in the green the entire time, and you've gotten your 10 or 11 or 15% as the markets have just continued to have a bull run out of the Great Recession. And those amounts of money will make you money over time. At 10% returns, you're doubling your money every 7.2 years. And so that's not too bad. But really, when you look at inflation as normally goes of 3 to 4%, something like that, you're only really getting a 6 to 7% real return on your money, and it's a single-digit ROI, and it's just not going to compound your money meaningfully in a very quick fashion. And so that is where we get to these economic downturns. When you are looking at putting money into the market during an economic downturn, everyone is terrified. When we were in the Great Recession, most people that are complaining about buying a house now could have probably afforded to purchase a home in the Great Recession at some point in time. From the dates between, about middle of 2008 to 2013, the home prices, that was essentially where we were in the peak, where we ended up, getting back to that peak in about 2013. Anywhere in there, you could have picked up the home at a very low price. You could have bought the dip, so to speak. Most people did not do that. They waited for the next crash because people were always predicting that the next crash was coming. That's gone on for forever and ever. And it's still going on today. And they're saying now, they're right, even though they've been predicting it for the last, 10 or 15 years. The same folks are not going to buy into this pullback. Now, whether this just, sits here at these teens of percent of a downturn, or whether it turns even more negative, 20 or 30%, we end up with a real crash, whatever. There are folks that are going to buy while the market is fearful. That's what Warren Buffett says, that you should buy while everyone is fearful, and you should sell when everyone is jubilant and they're, definitely going to be making money because the markets are always going up. That is what I've been doing as I get money out of my real estate investments. And it's, usually a couple $1,000s a month that I end up pulling out of these real estate investments. I will take 20% of that I'll pay myself. I actually use that money. The other 80% I put into VTSAX, as you guys are probably familiar if you've been around this channel for any, period of time. All of that money, when I look at my VTSAX account, it has barely changed in value over the last several months, because as the market goes down, I put money into it, and then that is listed in the ledger. But because the market is going down, the total value of my holdings is staying relatively the same. This is dollar cost averaging, putting money in as you get it or over a specific period of time or whatever. It's dollar cost averaging your money in. And so what I'm looking at is not necessarily the dollar amount, because I'm, in my late 30s. I got, God willing, a long time to go. What I'm looking at is the amount of shares that I have. And as I keep putting these in, the same dollar amount, if you would use the same dollar amount, is buying more and more shares as the market goes down. And so when the market does come roaring back, which it has done every single time in history, the housing market has never gone down over the long haul. The stock market has never gone down over the long haul through the worst things in history, through World War II, through Vietnam, Korea, the Iranian Revolution, through high rates of inflation, through high interest rates, terrorist attacks, protracted wars like in Afghanistan, the Cold War. The stock market and the housing market have never gone down over the long period of time. So if you can wrap your head around that right now is not necessarily a bad time, especially if you're in your 20s, 30s, 40s, 50s, probably even 60s. Now is not a bad time. Now is a buying opportunity. And this is one of those buying opportunities that you've missed in the past. This is the 9/11. This is the Great Recession. This is the December crash. This is the coronavirus crash. This is the time that you guys have been looking for to buy in, that if you can get over that fear factor of investing that money and putting it in there, this is where you can make the biggest moves ever. We started purchasing real estate in 2013, which was actually on the upswing of the Great Recession. Because we started purchasing real estate to rent, and we started doing that, I have been able to take $23,000 of my own dollars, okay, and as well as $23,000 of my business partners. And we now own, with $46,000 total invested, not a penny more, $1.3 or $4 million of real estate, depending on how the valuations are. And that is because we took a giant risk and we invested into a down market, especially one that was involved in real estate. So that was an even bigger risk, because we were investing in the exact thing that had that was involved in the downturn. We have now become wealthier to a degree of 10x from where we would have been had we have just kept our money in the sidelines or put it into the stock market or whatever. And so when you're looking at these downturns, always look at them not necessarily as a problem, which they are in the short term, but as a long-term opportunity for you to be able to get your money in, get it working for you, and really reap some double-digit, maybe even triple-digit returns over the course of a very small period of time. Remember, guys, I'm not a financial advisor. I am not your financial advisor. The things that I've said are not a recommendation to buy, sell, or hold a stock, crypto, real estate investment, whatever. Do your own research, but also just remember to look at the trends, look at when people in history have gotten extremely wealthy. Look at, who is it? Not John Kennedy, but his dad. Whoever John Kennedy's father was, I can't think of the name off the top of my head, invested a lot of money during the Great Depression, set his family up for generational wealth, until this present day. So guys, if you guys haven't subscribed yet, click the button down below, hit the notification bell. Look at the videos on the screen right now about investing in stocks, investing in real estate, investing in the cryptocurrency markets. Hit the like button for the YouTube algorithm for me. I appreciate you guys watching, and I'll see you in the next one.